What's up, peeps? All right, we've made some even further feature additions here to Daybreak, the opening range break trader. I'm going to show you what these additions are first. After that, I'm going to show you a secondary way that we can trade this to help you kind of think a little bit outside the box as far as what you can do with this tool. And after that, I'll go back with a little recap of how this tool works. We have other videos that kind of go into it a little bit in depth, but I'll give you a recap at the end. But let's just go ahead and zoom in here on our stats panel and show you what is new with the Daybreak Opening Range Break Trader. So let's take a little look at this here. I've zoomed in here on our stats panel, and there's some new additions to this stats panel. But let's go down from the top to the bottom to show what Daybreak actually does for your analysis. As we start here, you can tell that we are looking at the instrument ES, S&P 500 E-mini futures contract, which has a tick value of $12.50 per tick. I have 60 days loaded in my data series, and of that 60 days, there are 44 trading days. It tells us when the range starts. I have it starting at 9:30 a.m. And the range is ending at 9:44:59, which is essentially 9:45, which is the 15-minute opening range break for the ES. The stats tell us the high and the low of the range. They tell us the range size of today, which is 43 ticks on today's opening range break. The average range size is 52 ticks. So we know we're about average. We're a little bit under average, which is generally a pretty good place to be. And it tells us the largest range and the smallest range of the series. The largest range is 166 ticks. That was clearly on a news day. So that was probably NFP or CPI that caused that range to be so large opening up. And then we had our smallest range day of 26 ticks. So you can kind of look at the range as it's being formed and as you're trying to decide, do I want to trade this today or don't I want to trade this today? Where do we stand as compared to what an average day? Where do we stand as compared to a really low volume small day? We're about double what a small day is, and we're just about, closing in on what an average day is. So we already have a ton more information than you would have if you were an opening range breakout trader. The next thing down in our stats is we have a bunch of synthetic targets. I give you 5 targets that you can set to whatever you want, and also a stop loss. And this is going to give you historical data as far as which targets won compared to the stop that you are using. So we can see that with this particular stop, we have a 40 tick stop. Our target won at 10 ticks, won 84.1% of the time, and we had 37 wins with an 11 trade win streak. So that's new in our stats here. So now we can see of that 84% of these trades, 37 days were winners and 7 days were losers. All right, so that gives us some information right there. And it also tells us we had our largest streak of wins in a row were 11. And our largest streak of losers in a row were 2. So that gives you a little bit of information about your drawdown. It's not the full story of drawdown. It's pretty complex to get the full story of your drawdown because of the way that you can have interspersed wins and losses. That's something that I'm thinking about, and I'm going to try to perfect in a future version. I'm not sure if it's even possible, but we will give it our best shot. So we can look at our different targets here, and we've got a 10 tick target, a 20 tick target. We can see that 20 ticks won 72% of the time against a 40 tick stop. We can see that that was a total of 32 wins with a streak of 9, and 12 losses with a streak of 3. As we head down here, we have our target 4, which is 40 tick target against our 40 tick stop. So this is generally just a straight 1-to-1 risk reward across the board. And it has a 56% win rate, 56.8% with a total of 25 wins and 19 losses. So it's pretty much, even right across the board. It is still net positive, but what this will do for you is give you an idea of win rate compared to your risk reward and how they compare to each other. So let's just let's compare T1 to T5. We've got T1 at 10 ticks with an 84% win rate, compared to T5 at 80 tick target with a 43% win rate. So less than 50% of trades are winning on T5. So let's just, I'm going to pull out a little calculator here. You probably can't see it in the background, but I'm going to plug in a couple of numbers here. Um, and we'll do some math here together. So looking at T1, let's start with our wins. We had 37 wins at 10 ticks. So we had a total of 370 ticks uh, as winners throughout this period. And we had 7 losers at 40 ticks. So 280 ticks of loser on this. So we had 370 ticks winners and 280 ticks losers. So 370 minus 280. That means we had a net win of 90 ticks throughout the whole 44 days. Doesn't sound that great to me. We've got a serious backwards risk reward on that. Um, but we have a high win rate on that. So, at first glance, this might seem like a good idea to trade like this because your win rate is so high. I mean, we've got 11 of these trades that have won in a row. 37 out of 44 were winners, but in the end, we only ended up with about 90 net ticks. Still positive expectancy, it's not a loser of a strategy. That's what makes the opening range breakout so great. But let's compare that to our target 5, which has 80 tick target and a 40 tick stop still, and a below 50% win rate. So we've got 80 ticks as a target, and we won 19 of those trades at 80 ticks. That gives us a total of 1,520 ticks for winners. And then we have 25, punch this in here, 25 tick loser, and 25 losers out of the 44 at 40 ticks. And that gives us a 1,000, and even 1,000 ticks of loss. So we had 1,520 ticks of win and we had 1,000 ticks of loss. And so we have a net positive 520 ticks on ES for this 44-day period. And if you multiply that by $12.50 a tick, that is $6,500 worth of profit in those 44 days. All right, so this is the beauty of Daybreak. You can sit here and run these scenarios till your heart's content. Decide what you want to trade. Remember, this is only the 15-minute ES opening range that we're looking at right here. You can trade any instrument. You can trade any opening range time frame you want, the 5-minute, the 15-minute, the 30-minute, the 1 hour initial balance. You can do whatever you want. You can even do some things that sit outside the box, which I'm going to show you right now. Okay, so I have just pulled up an NQ chart here. And I have the opening range set to the 5 minutes before market open. So we're not really trading the opening range breakout here in this scenario. We are using this to capture the opening move of the market. And we have got some really interesting results doing it. Okay, so you can see here in this set of stats that we're on NQ. The tick value is $5 a tick. Same time frame, 44 days, but this time our range is starting at 9:25 a.m. and the range is finalizing just as the market opens. So we're basically trying to take the break of the 5 minute candle before the market opens. Let's take a look at some of our stats in this scenario. Um, Target one at 10 ticks on NQ. 95.5% win rate. Out of the 44 days, we won 42 days and we lost 2 days. So if you are somebody who doesn't like to lose and you just can't take the loss, hey, you got 44 days in a row here. You've only had two losses, and they were spread out. Our biggest win streak was 35, and our biggest loss streak was 1. So you had 35 days of winning 10 ticks on NQ in a row. So what does that tell us here? Well, we had 35 total days in a row that we won 10 ticks on NQ with a tick value of $5. Each one of those mornings, that was a $50 bill. And 35 of those in a row was $1,750. We have a 40 tick stop, which was a $200 loss. And we took 2 days of a $200 loss and 42 total days of a $50 win. So we are way net positive on this. So that is positive expectancy. So as you can see, our tools are completely flexible. We can try to capture odd timings of the market with daybreak as well as trading the natural opening range breakout. So on our opposite breakout stats down here for I call this the early five, or the a lot of the people in the room call it just the pre-market break. But we had 35 of these 44 days. It went out both sides of that range. So in this case, we had an 88% win rate as far as taking the opposite side of the range. So again, we have all of these stats here that you can tailor your strategy to fit your needs. Okay, so let's pop back over here to our initial chart that we were looking at, which is the ES 15-minute opening range break. And let's look at a couple things on this chart here now. At the current moment, I have got 2 minute Heiken Ashi candles that we're looking at. Our candles are independent of the range size that you use, so you can use any type of candles on any length of range. You don't have to use the 15-minute candles on the 15-minute opening range. Let's take a look at the actual range that this indicator draws. These large, thick orange lines are the actual opening range. The sections that you see above and below it are divisions. We call them extensions. Is what they are. They're extensions of the opening range. And the first line you have here is extension 1, which is 50% of the size of the opening range. Extension 2 is 100% of the size of the opening range, and extension 3 is 200% of the opening range. And as you know, this is a fully automated trade assistant where you can choose what type of orders you want to use when you take these opening range breakouts. Do you want to be a market order as it crosses the range, or do you want it to drop limit orders on the edges of the range where one cancels the other when that range breaks? But the point of this is you do not have to use these automated features. They are there for you if you want to. But things like the retest of the opening range are great trades. They've become some of my favorite trades. And in the meantime, those are manual trades. You can take an automated version of the initial break of the opening range, and as it comes back down to retest, you can enter manually using the same stats that we have seen in our little panel up here. We have these extensions measured for you, and they change day to day. They're not the same each day. But on today, on this particular opening range, the extension one, which is E1, that was 22 ticks. So we're 22 ticks to extension one. Then you can kind of cross-reference in real time. You can look up at your targets. And you could say, okay, 20 ticks was about a 72% win rate. So you know that you've got about a 72% chance of taking the initial opening range break and hitting E1. But after that trade is over and it comes back down and retests the opening range. That's one of the reasons I use Heiken Ashi a lot of times is because it gives me a confirmation of the reversal with the first Heiken Ashi bar up. I will enter on the retest of that range. And you can see how these levels are very useful. We come outside of our top target here. Look at how this first one came right up to our top extension and reversed back down. It had a failed breakdown at that next level and continued to get itself above that level and went up there for, oh, I don't know, probably about 10 points or so, something in there, so 40 ticks or so. We came back down, tested the opening range, and made its way all the way back up to our 86 tick extension 3 up here at the top. So these are useful all day long. What you'll find after you trade this for a while is that a lot of the levels that people mark on their charts from support and resistance, they actually originate from a particular opening range. On NQ, the 30-minute opening range, those levels last all day long. And if you didn't know they were the opening range levels, you would have marked them on your chart naturally with support and resistance lines. But once you start looking at these levels, you will see how they interact all day long with price. So anyways, I won't keep you any longer. Just wanted to show you the new additions to our stats. You can guarantee that this will just get better and better. There's nothing else like it on the market. So if you are an orb trader already, or you are somebody who is interested in the orb, you got to remember this is not our strategy. We didn't invent the orb. It's been around since the 60s. So, you got to do your research on the orb. But what you will find is that it has stood the test of time. Many, many professionals trade the orb. There's a million ways to trade it. You can do it any way you want with this tool, from automated to manual. There's nothing that gives you the analysis that Daybreak gives you in the trading industry when it comes to the opening range. So come on over to Scalpers Hideout. We are still allowing this tool to be sold separately from our lifetime package that includes all of our indicators. You may find that it's just a better value to jump on board, join our crew, and get the lifetime license because you get access to our Discord. It means you get access to not only about 15 cool indicators and strategies that we have built in the past, but once you're in there, you are in for life. That means that when we come out with something crazy next year, it's yours. But you can also buy this at a discounted price separately for about half the price of what the lifetime license costs. And that does not include the Discord because that's where all of our other indicators live. But it just gives you the tool. If you just want the tool, if you already know what you're doing, you trade the opening range, you just want the analysis, just pick up the tool. It's totally affordable in comparison to everything else out there on the market. So scalpershideout.com, come and see us. Hit me with any questions that you have, and have a great day.